practice or are you running a business? Valuation is the ultimate KPI.
Hey there, it's Mike Langford. Welcome to another episode of the Modern Financial Advisor Podcast, brought to you by Trulytics, the one and only comprehensive advisor transition management platform. This week on the show, I am joined by Nick Cantrell, an old friend and the founder of Green Future Wealth Management. And we're going to be talking about how to build a vibrant business by focusing on a niche that you yourself as an advisor are passionate about. Now, you've likely heard a lot of talk over the years about niche focus for your advisory business, but I think we're going to cover it in a much more rich way in this episode of the show, because when you hear Nick talk about his passion for ESG investing, why he decided to make a shift to this type of practice, and why he suddenly, after being in the business for over a decade, decided to flip a switch and go not only all in, but decide he wants to build one of the biggest ESG focused firms in the country, and why he's so passionate about it. You're going to love it, right? And I think there's a lot to learn here, regardless of what your focus is, the thing that you're passionate about. Really, really cool stuff. And Nick's used a lot of innovative tools to build this business. And most recently, doing something that involves the band Fish. And if you've never heard of the band Fish, here's what you need to know about the band Fish. People who like fish really like the band Fish, like spelled with a PH. So you're going to love it. Really interesting stuff. And we get into some M&A stuff in the later half of the podcast as well. So Nick is absolutely crushing it. I'm so glad that he reached out to me, because he's been listening to the podcast. He's like, hey, Mike, long time listener, first time caller type of stuff. Haven't talked to you in a long time. Anyway, fantastic to reconnect with him. So happy he's doing well. I think you're going to love this episode of the show. As always, you can subscribe to the podcast on Apple Podcasts, Spotify, Stitcher, SoundCloud, the YouTubes. And let us know what you think. If you have a question or suggestion for the podcast, just hit us up, podcast@trulytics.com, or swing by trulytics.com and use that little contact form there. Or, of course, hit us up on the socials. We're active on LinkedIn, Twitter, Facebook, again, YouTube, also very social there. Let us know what you think. Love to hear from you. Okay, let's get to our conversation with Nick Cantrell from Green Future Wealth Management. Well, Nick Cantrell, so wonderful to see you, buddy. It's funny. I've said this on a couple of other podcasts over the years that we made it through the technical difficulties, and you and I had to weather the storm as well. So it's hilarious. You never know the surprises are going to be thrown your way. So welcome to the podcast, buddy.
Well, thank you. And thank you for dealing with all my technical difficulties yesterday. I had a new laptop purchased in like 20 minutes after we were done, because I was just filled with rage. But now I'm looking forward to my laptop showing up on Saturday, and we made it work.
That's fantastic. It's funny. You and I were joking around about the rage purchase before we clicked record here. And, it's not out of the irrational realm that many of us do things, whether it's rage or some other tipping point. At some point in time, somebody goes, you know what? That's it. Making a change, right? I gotta buy a new thing. I've got to, make this change. And it happens in all walks of life. So I can't wait to hear how it's going with your new laptop.
Yeah, the next time we do one of these, it'll be smoothest connection you've ever seen.
Smooth as butter, as they say, right? It'll be great. I'm looking forward to it. Well, I think to kick things off, I want to, first of all, congratulate you on the 1 year mark of your new firm, Green Future Wealth Management. You've been in the business for a long time, and you and I have known each other for a long time. And I was so thrilled. A few weeks back, you reached out of the blue, by the way, which was, it's always nice when you have a friend that you haven't talked to in a long time. In fact, I don't think we've talked one-on-one since I moved to Austin. And you reached out to let me know that you were listening to the podcast and things were going well, and kind of give me an update. I'm like, this is fantastic. I'm going to talk to Nick. Guys, this is really cool. Number one, it's nice to know that somebody is listening to the show. It's always great. And then it was so fantastic to hear about some of the progress you've made and some of the recent changes. So I wonder if you wouldn't mind taking the audience through a bit of your journey. Like, how did you get to the point where you decided to start Green Future Wealth Management? And what was that thing that made you decide this is the change? Right? It wasn't rage. It was some other inspiration that said, you know what, I need to do this. What was that like?
Yeah, thanks. And I will say a little nugget of wisdom. Everybody, after you hear this, you can just log off. But and when you see somebody that you know, even if you haven't talked to them in half a dozen years or so, and they're shining, just shoot them a little line. Say, hey, I see you're out there, you're crushing it. I listen to the podcast. I love it.
Yeah.
And so I get a lot out of it. So yeah, spend 10 seconds shooting a little LinkedIn message saying, hey, thanks for the podcast. I'm learning a lot, and I appreciate you, putting it out there so that all of us can learn. That's all it was. So I do that a lot, actually. I do that with folks all the time. I shoot them an email, give them a call, LinkedIn, whatever, if I see that they're doing something well. And you'd be amazed. We don't build each other up enough. So you'd be amazed the sort of response of 10 seconds sending someone a nice note. Goes a long way. So anyways, yeah, so I launched Green Future Wealth Management last year. Last week was my 1-year anniversary, which seems crazy. I launched in the middle of the pandemic. And yeah, I have been an advisor for 14 years now and was a part of a large firm, multi-billion-dollar firm that had been involved in acquisitions. Good firm, good team, good management, good founder. And so was able to see how acquisitions were being done in the space at a national level. They had acquired practices throughout the country, and had actually, I had been running one of the practices that they had acquired, but I really wanted to focus on my niche, like a lot of us are. A lot of us are really finding the more you do the work. It's funny. I didn't set out to niche. I just got drawn into ESG investing, socially responsible investing. I started volunteering, serving on boards of not-for-profits that I was really passionate about. And, my clients became my friends, became my volunteer work. And all of a sudden I found myself running a niche practice, even within this larger national firm that wasn't a niche firm. And thought, I think it's time for me to hang my own shingle, and did just that last year. And we've had great response and great growth, and looking at some acquisition and having some good conversations with some advisors that are looking to step back or partner or looking for continuity agreements, as well as just having really strong organic growth too. So I just couldn't be happier with it.
That's fantastic. And for those who might not be overly familiar with the core elements of ESG or sustainable investing, what does it entail, and why is that so important to you? What was the kind of the thing, like, this is what I want to do? I mean, lots of people niche and they focus on a niche of, hey, I'm going to talk to people in the technology industry and so forth. But you took it a little step further, right? You're niching with a certain type of folks for a client base, but you're also like, hey, this is the type of business we're going to do. So I guess maybe the first step is like, let's talk about that ESG, and then kind of walk us through like that decision process.
Sure. Yeah. So ESG stands for environmental, social, and governance. They're the three main pillars of some factor-based investing. But really, it's focused on evaluating companies and investments on areas that are not necessarily directly reflected on the balance sheet, although they influence the balance sheet in a lot of ways. So it could be companies that have, looking for companies that have good environmental performance or good labor relations, really supportive of LGBTQ rights. I have a little bit of a specialization in that I really focus on nuclear weapon divestment. I've done some research in that area and have done some presentations as a part of some not-for-profits to try to get some large, we try to get the Yale endowment to divest from nuclear weapons manufacturers. And so it's a part of really just a core interest of mine. I think the best way to evolve a niche practice is to find something that you're passionate about. If you're into minor league baseball, try to go that route. If you like Dungeons and Dragons, go that route, whatever it is. For me, it was really focusing on trying to improve the world through trying to shape corporate behavior and through essentially engaging with companies and investing in companies that are leaders in all of these areas. And the icing on the cake is there's a whole lot of clients that want that. I think it was Morgan Stanley just released a study that about 85% of clients want to have these conversations, and 95% of millennial clients want to have their assets reflected with ESG and their values. I always describe it as helping clients align their assets with their values, because we don't have a particular ethical mandate that we sort of force on people and try to shoehorn them into our values. My values are irrelevant to clients' values. I want to help the clients manifest what's important to them through their financial life.
That's I like that angle there of finding out what's important to the client and then focusing on that. And we often talk about that through the client's goals, like, what are the outcomes they want from their investing? And as you just articulated very well, sometimes the outcome is like the investment process itself, the things that my money is helping, make possible in the world. I want them to be things that I want to make possible in the world, right? Like, so I want a green future. I want, whether it's electric cars or whatever, I want to have a more equitable and diverse country that I'm interacting with. And okay, great. I want to invest in companies that are doing that, and that's meaningful to me. And the thing that jumps out at me a little bit as well, and what you're describing there, you mentioned the minor league baseball as a parallel, if you're into that type of thing, is, I've often said on this show that, hey, look, we're kind of in a commoditized business, if you will. And I know people don't like to hear that, but for the most part, we all sell the same stuff, right? Stocks, bonds, mutual funds. We have access to the same 7,000, individual securities. So they're all.
I love our clients. Yeah. We all think our clients are the most important thing. We want to help them accomplish their goals. Yep.
That's right. And the pricing's all about the same, right? It's, you can expect to pay about 100 basis points, give or take, maybe a little more, a little less, whatever.
Yeah, we're all roughly at 1% around $1 million,
right?
More or less above or below, but that's about what it is.
And so I always say, like, at the end of the day, the client, he or she or they, the joint, the couple or whatever, is making a decision because they're connecting with you on some level, right? Because they could walk across the street and get pretty much the same stuff from somebody else. There's a reason why they're choosing you, right? They're choosing, and so an advisor who's more in tune to what the client really wants or the things that are important to the client's life, right? And by the way, can lead with that. Is awesome. And I'm often reminded of, you ever read the book, The Millionaire Next Door? The two authors.
A long time ago.
A long time ago. So it's a fantastic book. If you haven't read it, by the way, go check it out. It's two authors who decided to study American millionaires. And like, what is a millionaire, right? And it debunks a lot of common myths, right? Of like what you think of as a millionaire. They're not all flashy and so forth. They typically drive domestic cars. They buy used cars. They drive, they drink Budweiser versus import beer and all that type of stuff. But those authors also wrote another book, a follow-up book called Networking with Millionaires. And they studied how, like, some of the people go out and get millionaire clients and build a business. And one of the things that they profiled, one of the people they profiled was an insurance agent. And I guess this guy was like a top performer at his firm for like the longest time, just crushing it. Every year he won, like, top sales guy of the year. Yet he never, ever showed up at the award ceremony, the insurance conference, to get his award. And at one point in time, somebody's like, dude, like, why don't you come here to get your award? And he's like, I'm going to be at the races. Because he basically worked with race car drivers and people. And like, what? He's like, listen, I've never sold a single insurance policy at an insurance convention. I'm going to be at the races where my clients are. And it's kind of like we were talking about, like going native with your client base or your desired client base is really the best way to do it.
Yeah, and I think that there's great opportunities within niche client bases in general. If your niche is something that you both have an affinity for, then I think that's a unifier. This particular niche tends to be really, really popular with academics and artists and writers and musicians and also inheritors of wealth. So I would say in my practice, the money that people have inherited is probably about 1-to-1 with the money that they have earned and set aside themselves. So if you're looking to be a part of that generational wealth transfer that people talk about it as if it's coming down the road, but we're in the middle of it. It has already started, and there's a lot of money that's going to be changing hands through inheritance. Some of it is already being gifted, some of it's already being inherited. A lot of those folks are just not going to keep their parents or their grandparents' advisor. And a lot of those folks that are going to switch to somebody who can talk with them about what's meaningful in their life. And so I think it's a great opportunity for us. It's where we find a lot of our clients. A lot of our clients have recently inherited funds, and they want to make sure that their newly found wealth is a fit for their life and what's most meaningful to them.
That's awesome. I want to dive a little more into your going native concept in a few minutes here. But before we get there, I had a little note for myself to talk to you a little bit about the self-education process, because in our prep call, you mentioned that you had to self-educate on a lot of the concepts on this, ESG investing process, if you will. So let's explore that, because one of the concepts that I think is important for advisors when it comes to focusing on a niche is that they go native, right? But you can't go native and blend in if you just show up looking like a boob, right? Like, you show up looking in a 3-piece suit at a tech meetup in Silicon Valley, you don't look right. So you do have to.
If you don't have the zippy vesty thing at a tech thing, they run you out the door.
Yeah, I mean, you have to. The concept of self-educating, like, you have to prepare a little bit. You have to be able to be conversant a bit, have a curiosity about things, and know enough to be functional. So, how did you go about doing that? Like, what was your process like?
It was a lot of trial and error. There is, and there's very little that is in the typical educational curriculum for advisors regarding this. There is one designation. It's through the College for Financial Planning. They partnered with US SIF, which is a Sustainable Investment Foundation, or I'm not sure that's exactly what it means, but that's what they do. It's a good resource for people in the space. I'm a member. And that's the CSRIC, Chartered SRI Council, I think it is. And that's great. It's the entire designation is just focused. This is all it is. But other than that, which I just did last year, there's very little. And I like to study. I'm a total nerd. I've got a CFP and a CHFC and a CLU, and I have done the SEMA curriculum this year. I'm going to be testing for the SEMA designation. So I've got those letters, and you could probably put everything in all of the schooling for all of those designations on, 2 pages of text regarding ESG investing and SRI. So a lot of it was just, the great educator of Google. You go type in what it is you're looking for, and it takes you to different resources. I found US SIF early, ussif.org, and it's a not-for-profit that is focused on issues. It's US-based. They have them all over the world, but it's focused on helping individuals invest sustainably, helping advisors and asset managers incorporate sustainability principles into there. So, and they have a lot of educational programs that you can do. They have some little classes that you can take that are free. They're outside of the more formal designation, which is a much bigger commitment. And I found that that was a great source. Even something as simple as, well, let's go to the Calvert website. Everybody's probably heard of Calvert. You ever been there and read through everything they have? I mean, that would take you a month to read through everything that they have there. And it's good. They put out research. It's comprehensive. It's good stuff. So I did things like that because essentially I wasn't sure where else to get it, and just spent a lot of time reading the literature that exists and trying to educate myself, because other than the one designation, we don't have a lot in the industry that really speaks to it right now, even though it's something that is in high demand amongst clients.
Yeah. Yeah, it's funny. What you just described there is what I often refer to as going down the wormhole, right? It's like, go down the wormhole on the topic, because whether it's Google, YouTube, or whatever, you start clicking around and typing in a few things, one thing will lead to the other. And you will find yourself very, very quickly becoming super knowledgeable on stuff, right? So, I was mentioning before we clicked record here that I'm in the market for a new car, and I'm looking at an electric car. And you wouldn't believe how much of the content that shows up on my Flipboard, on my YouTube, on my Google now is all about electric car stuff, right? Like what's going on in the world of electric cars and trends and all the type of stuff. So it's almost impossible now for me to avoid becoming increasingly more educated on the topic. And that's just a small thing, right? That's a consumer product. It's something that I'm, passionate about, but it's, from a business perspective, the same thing can be applicable. Just start poking around and you'd be surprised at how fast you get really smart. And one of the things that I always think is so important for advisors to internalize is you already know more than 95% of the entire population on finances, right? And anything you actually actively go out to get some information on, you're going to know more than 95% of the population about that, because people, hey, we stay in our lane generally. It's just, whatever you do, if you made your money as a carpenter, if you made your money as a musician, that's what you're going to know a lot about. And you may have a hobby or two, but getting knowledgeable isn't all that hard. It just takes a little bit of fundamental work, as you were talking about.
Yeah, I agree. And if it's something that you're passionate about, it doesn't feel like work. I mean, I read that stuff because I geek out on it and I really enjoy it, and I volunteer in it, and it's, that's not work to me. That's oh, look at this new thing I haven't read. Oh, somebody did a study on that. Ooh, let's read that. Because that's just how I am.
The one that jumped out to me is would you say nuclear weapon divestment? Divestment. Sorry, the nuclear weapon divestment. Where did that come from? So where was you're like, you know what? This is a passion point for me. Let's go.
Sure. Yeah. So it had always been something that it was a focus of clients: fossil fuel divestment, weapons divestment. Those are the two most common areas that clients want to be rigid on. Two areas where I'm most rigid in my asset management typically. And so I just, it was something that I was managing around, and I ended up, a couple of my clients actually ran a not-for-profit that was focused on nuclear weapons divestment. And once they found that it was something that I was passionate about and knew something about, although not even a ton at that point in time, they started just picking my brain for the not-for-profit. And then eventually that led to sitting on the board. And then that led to, I started doing some research and contributing research to I contributed research to New York City pension system, which is going to divest from nuclear weapons. And we put together a presentation with my research and presented to some of the folks at the Yale Endowment, the ACIR there, on why they should divest. So it sort of came from an initial interest of mine and paired that with opportunity to serve in an area that I was passionate in, brought to me by my clients.
To me, it's like it's an order of magnitude more powerful. Like you didn't just go at a niche like, hey, I'm going to stay at the surface level of the niche. You were going along, and then you found like a little branch that was really interesting. You're like, let me follow that one a little bit more. And I imagine as a result, kind of as you've alluded to, like not only did it lead to some clients, but it leads to referrals from those clients. Like you're going to find this, and no other advisor can compete with that, right? Because like find me another advisor who's like really well versed and also a leader in nuclear weapons divestment, right? It's just like there's probably you and you. I'm not sure how many else is there out there.
Yeah, I mean, I don't think I'm all that remarkable person. I don't think there's anybody else who's doing that.
Right. Yeah. And so I don't want to use the word extreme as an extreme niche, but it is it's extra focused, right? It's like, so you started with a certain lens and then you refined the focus a little more over time. And I'm spending a lot of time on this because I just think it's so important because, there's a lot of talk about niche marketing and people, I think advisors often get a little nervous, those who haven't decided, because they feel like they're leaving stuff on the table. But I think the reality is your business gets much, much easier, right? Your marketing messaging gets way clearer, right? You can say, we are advisors and we focus on not only this type of client, but this type of investing. Wow, messaging, really easy to articulate. And while, yes, using that messaging is not going to land on everybody, right? But when it lands hard, right? It's like Thor coming down, leaving a dent in the ground. But it's just like, it's just like, boom, here it is for you Marvel Comics fans. That was a good drop for you. But you've also done some other fun stuff. Like this is what I in our prep call, I was like, just like, I cannot wait to talk about this. It blew my mind. Like, so you are a big and probably lifelong, or at least since probably your college days, Fish fan.
Mm-hmm.
Also, you mentioned Grateful Dead fan. And so you said, guess what? I recently sponsored my first podcast, and it's a podcast dedicated to like Fish fandom, right? And turns out one of the members of the band is like the founder of the podcast network that's doing the show. And I'm like, I got to hear this story, right? Like how you decided to do this, because you gun to my head, I wouldn't be able to recognize a Fish song. I've never been to a Fish concert. I've had a few friends over the years who were avid fans. And I do know that it is a group of folks who are just like committed, I guess is the best way to say it. So how did this come about and how's it working?
Yeah, I mean, I'm a huge Fish fan. I probably listen to Fish every single day.
Okay.
And I have been for years and go to see a lot of shows, although, not as many as a lot of people do. And it's called the Osiris Podcast Network, and it was founded by a guy I went to high school with, actually, who was friends with my brother. He's a couple years older, and the lyricist from Fish. And they founded this, it's this whole network of podcasts. They probably have 20.
Wow.
And most of them are music focused. Some of them are not, are totally unrelated to music, but most of them are music focused, and with a specialization in Fish and Grateful Dead. Mm-hmm. And so I've listened to the podcasts, and they've, it used to be just him hanging out in his apartment doing a podcast and drinking IPA and talking about Fish. And now it's a major it's a major corporate ongoing endeavor. And so I started to hear that they've got these sponsors, and I just shot him I might have even Facebook messaged him because I'm Facebook friends with him. I just shot him a message, going back to that, you shoot somebody a message saying, hey, loving the podcast, thinking about doing some marketing, and I think it might be a good fit for my client base. It's a progressive audience. I mean, we can use the H word. We can say it's a bunch of hippies, and that's fine to self-identify. And so I thought that it would be a good fit for clients who are wanting socially responsible investing. And they put together a package for me, and I did start doing I actually just started my second package with them because they have a new pod out. So yeah, it's been great. The new pod just started. They've only had one episode, but I did all last season of on a bunch of shows. I think there was maybe about a half a dozen different shows. And I got good clients. I mean, it's paid for itself, and
that's great
in 3 or 4 months. So, and in our business, we obviously want clients for life. So hopefully it'll pay for itself 50 times over. So I'm happy with it. It wasn't, I mean, it's one of the things about niche marketing is you're probably not going to get 100 inquiries.
Sure.
So I didn't get a ton of inquiries, and some of them, weren't a great fit, but got some good clients out of it. And they've been a good partner. They were great to work with. And so, I think niche marketing is a great idea. And I'm excited to be doing podcast marketing because I think that there's a lot there. I think podcast listeners in niche topics tend to be very committed. So that's been a great start.
I love it. You have no idea how happy this made me here when you told me that. I'm like, this is fantastic. I could not. Well, first of all, as a guy who's running a podcast studio, and
you probably went home and told your wife, you won't believe it. Somebody I talked to is paying money to be on a podcast.
I know. Well, exactly. So, we produce our shows, for Truelytics, and so forth is the show that we produce for the Modern Financial Advisor podcast. And we don't accept advertising because we're producing the show for Truelytics. But it was fascinating to hear because I'm like, that is 100%. Like, first of all, you're speaking my language because I 100% believe in niche marketing. And it was like, Nick just hit it out of the park with this one, right? Like, find your people and put your message in. And now it's like, look, how many other financial advisors are even considering I'm going to advertise on a fish fan podcast, right? Like, nobody. The answer is probably you were the first one they ever heard from, I would imagine. And it's like, and of course you're going to end up with some clients, right? Now, like you said, it's not like advertising on your local radio station or whatever, or a mass market, Joe Rogan type podcast. It's like, no, you're going down at a very focused level here. And the people are going to come in, like you said, some may not be qualified, but those who are qualified are like, yeah, you're my guy. Of course you're my guy.
That's been the response. And what's been really funny is all the wholesalers that have reached out to me the day after a new podcast drops saying, I heard you're sponsoring there. So apparently a bunch of wholesalers are fish listeners too, which stunned to me. I would have never thought it.
That's another interesting thing I always find is like, you discover these other community or connections with people that you actually may have known or bumped into at one point in time, but then you find out you both like the same thing, and it amplifies that relationship as well. I always talk about, social media specifically, but the modern world, kind of like our interconnectivity with technology now, it's like you can accelerate relationships way faster than you used to be able to, right? Because it used to be like, as an example with the wholesaler, when were you going to talk to the wholesaler? At a conference, maybe, if he or she made a sales call to you in person or on the phone. That was kind of it, the only time you're going to interact with them. But now you've got LinkedIn, you've got Facebook, as you mentioned, you got Twitter, you've got podcasts that can be regularly, literally in their earbuds. They're walking around like with you in their head or in their car while they're driving around. It's like, so there's another level of connectivity there that I don't think all of us fully appreciate how powerful it is now, because I produce shows, host shows, and I listen to a lot of podcasts. And there are people that I've never met in person, but I feel like if we ever bump into each other, I'm like, yeah, we've known each other for 10 years. Of course we've known each other. Like, I listen to you all the time. Like, we're buddies. Yeah.
Yeah. I got an update email from one of the clients that I got from advertising on Osiris. And he said, it was something with one of the accounts we set up. And he tagged in at the end of it, heard you advertising on the new show, and it made me really excited to be a new client. I thought, well, that's great. That guy's never going to leave.
Well, and you know what? Here's another little, on the flip side, meaningful and powerful for the client, but for you, Nick Cantrell, professional, but just human, it makes your work much more enjoyable, right? I'm interacting with people. Not only do I like these people, I have so much in common with them. Right. And I relate to them. Like, yes, it's a stretch to say that just because we like the same band, we're going to like all the same things. And I'm going to like you. Like, I'm sure there's people who like fish where you're like, that dude's annoying. Like, put your shirt back on, rebel, that type of thing. Right. But, it makes it a lot better. Like, you're going to find people and that's, life is a lot better if you're like surrounding yourself with people that you enjoy being around and common experiences, right? And common tastes or whatever. It makes it a lot easier to find that, that bond.
I agree completely.
Yeah.
It makes the work more enjoyable, and it ties you to your clients, and you create a community around your work.
Fantastic. So I want to switch gears to talk about an inflection point, because you're interesting to me for a lot of levels, not just because fish and, you seem to, I think you broke a mold or broke a norm without maybe realizing you broke it. At least maybe as an outsider looking in. I mean, I've spent a lot of time talking to advisors. I've spent a lot of time in this industry. And usually a person's been in the business for 10, 15 years. Usually they've hit a plateau at some point in time, and then they transition into what we would call a lifestyle business. Like, hey, listen, I make a few $100,000 a year. I'm doing well. I like my clients. I've got reasonable work hours. It's recurring revenue. Life is good. And boom, I'm just going to stick, right? But there seems to have been an inflection point for you where you're like, all right, I want more, right? And it wasn't just recognizing that there's a niche. I think it was that there seems to have been like, I've decided I want to grow this business a lot more aggressively to serve more people, but also to just make a better and more profitable business. What was that? Because, we're going to talk about this in a few minutes, but, you're even looking at M&A activity here. So what was that inflection point for you? Was there an aha moment? You're like, all right, I want to step on the pedal here.
You know what it was? It was, I realized, and I know that this is a broad group, so I don't want to, I'll choose my words carefully. I realized a few years ago that I thought that the primary source of improving the behavior of institutions at a global level, but certainly in the United States, was investors using their dollars to shape corporate behavior. Because I didn't see the sort of leadership and growth in the ESG space from the government. And I didn't see it in many cases from the corporations themselves just deciding to be altruistic to move the country and the world in a better place. But I saw how socially responsible or ESG investors were shaping corporate behavior in a positive way. And I decided, and it sort of sounds naive to say that, but I decided if I'd made a really big firm that I could potentially improve the world, not just for my clients, but maybe we can make something that's big enough that it will just move the needle on the whole planet. And so that's what I'm trying to do. I'm trying to make the biggest socially responsible asset management financial planning firm in the country. Because I think if we get big enough, and there's nobody who's doing this at scale right now. I mean, there's very few people doing it at scale just for general financial planning and asset management. But there's certainly nobody doing it at scale in this niche. And I thought, well, if we can get something that's really big, then we can nudge the planet forward. That was it.
Love that. I think more of us should think bold like that. And now you kind of making me feel bad about myself. I think I have to start thinking a little bit bolder. I found that very inspirational. I'm like, every once in a while I have these fleeting thoughts of, I should be bolder with my things. But that one kind of just hit me right in the feels on that. Like, you know what? He's 100% right. Like you can have such a big impact on people and on the world, much bigger than you think you do. I mean, we see some of the stuff in the news every once in a while. You saw, as an example, Greta, when she was doing her speech at the United Nations and so forth. And here's this, whatever, she was 15-year-old girl, whatever, making a speech and touching people all around the world. And you're like, a little shame here, late 40s.
I know. She's my hero. Right. Greta, she's my hero.
Yeah, it's fantastic. It made an impact on me for sure. And it's so, yeah, I think we should all reach a little bit higher and occasionally realize like, you know what, with just a little bit of extra effort or more focused effort, you can make a huge impact there. So let's shift into the application of how you're going about doing that. I mean, obviously you made a decision like this is how we're going to run the business. This is the things we're going to focus on. These are the types of clients we're going to attract. But you've also started doing a few things to, again, scale a little more aggressively. So one of the things you mentioned was that you entered into a continuity agreement with another advisor in which you would take over their business, in the future. That's obviously a really good step, and it also gives for your clients too. If you have the reciprocal continuity agreement, it gives them peace of mind. How did that come about? How did you go, especially since you're in such a new business, right? You just celebrated your 1 year anniversary there.
Sure. Yeah. Well, I think it's incredibly important for advisors to have continuity agreements. When I decided to join, I'm at Cambridge is my broker, and I work with TAG, which is my OSJ group. They're there's over 300 advisors at TAG.
Okay.
So large OSJ group, and they're phenomenal. I love them in many ways. But one of the things that was really important to me is that they would serve as my continuity plan. And so I signed within a week of me launching my firm, I had a signed continuity agreement. I think before I even had any assets, to be honest. Because I think it's really important. When you see the figures on, I don't even know, it's more than 50% of advisors. I think it's around 70% of advisors don't have a continuity agreement. That was really important to me. Taken in a lot of clients whose advisors have unexpectedly passed or become disabled, and some of whom it's really negatively impacted the clients they've lost. So it was important to me, and to be honest, it was important to my clients. Hey, you're launching this new firm. It's just you used to be a part of this big outfit. So I had that, and then I essentially, we all swim in our little lanes. I talk with all the other ESG folks and some of the other advisors here, and I've offered to be the successor, sort of the just in case pull ripcord successor for other folks that run similar practices. I don't think it would be a great fit for someone who didn't have an ESG focus, because I'm just not sure that I would be what those clients would want.
Sure.
Even though I have some clients, about 20% of my assets are traditional. So we don't force sustainability on anybody, but I just didn't think that it would be a fit for that. So I'm only talking to folks like that have similar practice focus.
Yeah.
But I think it's great for them because they can protect their clients, protect their families. I think it's good for me because it helps me begin to develop relationships with folks who may be interested in potentially selling one day.
Yeah.
My obvious hope is that every single one of those folks that I've talked to about that is going to live to be a ripe old age and be healthy every day.
Yeah.
And choose at the point that they choose to retire that I'm the person that they want to. And in the meantime, I'm their insurance policy on that. Because they know that they're taken care of. So I think it's a great way to build, if we look at it, the large folks, the focus financials, the institutional acquirers in the space, they're building deal flow. And that's how I think of it. I think of it as building client pipeline when you're prospecting, building deal flow for potential M&A activity. And I think a great stepping stone is the succession agreement. Obviously, it's tougher in the BD space. I think it's not impossible, but it's much more difficult to do across broker dealers.
Yeah.
So, but not impossible, and certainly it's something that I've had conversations with folks there too. I think there's more to it from a legal standpoint as well, and the deal would probably look different.
Yeah.
haven't pulled the trigger on one of those yet. Yeah, that's what I'm doing there. And I'm also looking at an acquisition that I'm hoping to execute in the next 90 days as well. And that's more of just a traditional acquisition of a retiring advisor.
You know, I don't talk much about the Trulytics products on the show, but you mentioned one thing that really got my brain thinking about this. And number one, how important continuity is, having a continuity agreement. And, Trulytics has got the solution called True Continuity, which allows you to kind of put those agreements in a digital locker and make sure that in the event that something happens, that break glass, pull the ripcord type of scenario happens, the continuity partner can put things in motion smoothly, right? That they don't have to go hunting for everything. Like they know who your landlord is for your office space. They know who your broker dealer is. They know all the people to call. Like, what are the most important clients? And when you call them, what do you say? Like, what are their particulars? All that type of stuff can be in there. The other thing that I think so wisely shared was like that you're looking for people to have that reciprocal continuity partnership with, who also share an ESG focus, right? That also have a similar philosophy and approach to their business. And some of that can be at that philosophical level, but then some of it also can be like, frankly, process. Like, what's your investment process like, right? What technology stack do you have? Which broker dealer are you using, as you mentioned? And Trulytics has their new True Match solution, which it's relatively new, less than a year old. That's out there, and it's very simple. That's the type of stuff it facilitates, right? Like, if you're interested in finding other ESG advisors, well, you can find them on True Match. If they have to be in your broker dealer, you mentioned you're with Cambridge, or what, check that as a box, right? This is who we're looking for. And the matchmaking can be for continuity. It can be matchmaking for, hey, we just want to get together and hang out and have an advisory group and talk about ESG stuff. That's what it's there for. So, again, I don't plug the product too often on the show, but you really just got my brain thinking on that type of stuff. And I know, by the way, for those listeners, Nick is going to be doing some awesome case study stuff with Ian, I believe. Sure. So it's going to be awesome. I can't wait to read it. It's going to be fantastic.
Yeah, me too. I'm a geek. I love to read case studies.
It's cool. It's cool. You're like being like, you're like a science project now. We were studying you guys. It'd be awesome. Well, we're reaching
I'll just piggyback on there before you move on. One of the things that I'm doing also to because I feel like I'm going to get a lot out of it, but also to build potential M&A deal flow, is I'm starting an ESG study group.
Yeah.
And, if you work with physicians and you want to acquire practices from other people who work with physicians, I would encourage you to start a physician advisor study group.
That's really smart.
You're going to meet all the other people that work with physicians, and some of them are going to have 25 years in front of them, or some of them are going to be looking for their exit.
Really, really smart. No, it's so true. It's like that I've encouraged my son. Like, everybody loves to hear. I tell my stories about having a teenage son a lot on the show. I'm sure people are sick of it, but I give him that advice all the time. I say, hey, listen, starting an event, if you will, or an organization, it's actually not as hard as you think it is. Be the person, kick it off. Like I have an event here that I host every year at South by Southwest for the fintech and financial services community. 300 people come. Now, it is some work, but it's actually not as much work as you think it is, because I'm not the one who's presenting. I invite startups to present on stage. Fine. Once people hear that there's this event happening, guess what? People sign up and they show up. Sponsors offload the cost. So it costs me next to nothing. I don't make a profit out of it, but exactly what you were talking about, I become the center of gravity, right? Like everybody knows Mike Langford puts on this really big event every year at South by Southwest, right? So I'm very, very much plugged into the community that I want to be plugged into. And it's relatively little work to get that community off the ground, to be the person who does it. So I highly encourage people.
And it works because you're focused on providing value.
That's right. That's right.
I'm starting an ESG study group. Why? Because I can sit around and talk about it all day because I love it. Yeah. And there's so much that I don't know about it. And all these other people, they probably know some of that I've never even heard of. And they're thinking the same thing. They're saying, hey, we have shared interest and I want to know all the stuff that you know too. So if you focus on providing value to the people that you want to partner with, it's a great way to start that relationship.
Yeah.
That's what I'm doing.
100%. 100%. Well, this has been fantastic, Nick. I am sure, talking about deal flow and other flow of ideas, that there are bound to be some folks who have listened to and or watched this episode of the show, and they would love to follow up with you just to learn more about a whole bunch of the stuff that we covered today. What's the best way for somebody to reach out to you?
Sure. Yeah, you can check out the website. We're at greenfuturewealth.com. And my email is probably best. I'm just nick@greenfuturewealth.com.
Perfect.
And yeah, I'm happy to answer questions, happy to do phone calls, happy to chat about ESG or about any of the stuff that I'm doing to try to be active in the M&A space as a startup, and happy to build some connections.
Perfect. Well, this has been fantastic. I really appreciate you carving out the time today. Nick, thank you very much for joining us on the Modern Financial Advisor podcast.
Thanks for having me. This has been great.
Thank you very much for listening to and or watching this episode of the Modern Financial Advisor podcast. It's always fantastic to have you with us. Huge props to my man, Nick Cantrell from Green Future Wealth Management. It was amazing to reconnect with you, Nick. Loved having you on the show. And by the way, thanks for the inspiration. Near the end there, when I asked the question, like, what was the switch that flipped, if you will, that made you decide to go from running a nice business to I'm going to launch Green Future Wealth? I did not expect such a big vision, to be honest with you. I expected, hey, I want to go out my own and kind of control my own destiny a little bit. That's what I really expect. Most financial advisors, when they're going out on their own, they want to make a little more money, right? Have a little more control over the business. Totally makes sense. Did not expect, hey, listen, man, I want to change the world. I think we can build this big business that forces companies to be better world citizens and make the world better for all of us. I'm like, man, awesome stuff. Kind of very inspirational, making me think a little bit differently about the things I'm working on. So thank you for that, Nick. Okay. As always, if you have a question or suggestion for the show, like Nick, reach out, podcast@truelytics.com, or you can ping me. I'm Mike Langford everywhere, basically. That's what Nick did. Reached out, said, hey, love the show. Good stuff. And I was like, this is amazing to talk to Nick again. And so a few emails later, he's on the show, right? So maybe that'll be you too. So love to hear from you. Please do like and subscribe to the podcast on Apple Podcasts, Spotify, Stitcher, SoundCloud, or the YouTubes, wherever you like to get your podcast jam on. We need to continue to grow this community, right? So one way to do it is subscribe to the pod and let a friend know you're listening to the show, right? Tell them, hey, you got to check out the Modern Financial Advisor podcast. They have great people like Nick on, and I'm learning a lot. So listen to it, okay? All right. Until next time, hope you're enjoying life. If you've been double vaxxed, hope you're out there. I had lunch today on the patio with a friend. It was amazing. Face to face, no mask, eating lunch. The restaurant was jammed, by the way. It's awesome. People are loving getting back to the real world. So hopefully that's you as well. All right. We will see you next time on the Modern Financial Advisor podcast. See ya. Bye.